Required 6. Cash budget. Cash budget. So I want to do April, May, and June. And then for the quarter. And all we want to do is take all our amounts that are paid in cash by each month and put them in here. So I'm going to start with my beginning cash balance. And to that, I'm going to add my cash receipts, which we already did that budget. And then I'm going to subtract my cash disbursements. And go from there. All right, let's go back to the problem. For the cash budget, Motor maintains a line of credit to a maximum of $200,000. The interest rate is 5% per annum, calculated monthly, and is paid on the first day of the following month. Motor maintains a minimum cash balance of $30,000. Any monies taken out of the line of credit are removed on the first day of the month. Any monies repaid to the line of credit are paid the last day of the month. A cash dividend of $50,000 was paid in April. Equipment was purchased in May and June for $100,000 and $15,000 respectively. The amounts were paid in cash. And Motor has an April 1st cash balance of $40,000. All right, so we're going to take that information into account as we go and prepare our cash budget. But the first thing they did say, the April 1st balance is $40,000. Cash receipts. Okay, so let's do cash receipts from our accounts receivable first. We did that whole budget above. It's the first one we did here. And we said that in April, we're going to receive cash of $340. May, we're going to receive cash of $436. And then we're going to receive cash of $540 in June. So we'll just put those three numbers down. While I'm up here at the top, we then had done a cash disbursements budget and stated that for direct materials, these are the amounts we're going to pay out each month. So I'm going to carry those down at the same time so I don't have to scroll right back up here. All right, so accounts receivable was $340 that we got in cash in April, $436 that we received in cash for May, and $540 that we received in cash for June, for a total of $1,316,000. All right, cash disbursements, I then said we're going to have accounts payable that we did, the direct materials, and those other numbers, and we'll carry those down. $132, $150, $174, $375, $202, $425, for a total of $508, $950. And these are all dollars. You don't have to put the dollars on those. Okay, the accounts payable was for direct materials. When it comes to things we're paying for, we're going to pay for direct materials, direct labor, manufacturing overhead dollars, selling and admin. All of those have amounts. So that's we also need to pick up because this was for direct materials. So we need direct labor, manufacturing overhead dollars, the cash amount, selling and admin expenses, the cash amount, and then we'll go from there. Direct labor would come from the direct labor budget, so we have to go back to 9-1 for that. So 62.4, 75.6, and 87,000 is what we're going to put down for our direct labor dollars. $62.4, $75.6, and that's the key. All of these come from another budget, pretty much. Manufacturing overhead dollars, we scroll up to our manufacturing overhead dollars, but pull the cash line only. Don't pull the total line for this one. So manufacturing overhead dollars cash is this line here, the 61.6, 70,400, 78,000. Because they did say it was paid every month. total of 210. And then we had selling and admin costs. Again, go up to the selling and admin, but again, pull the cash line. Okay, and if I just go back to the for the cash budget information on the first page of the question, they say a cash dividend was paid in April, $50,000. And they say equipment was purchased in May and June for $100,000 and $15,000 respectively. And they say the amounts are paid in cash. Now leave a line here for interest just in case we need it. Because they did say that the interest rate is 5% per month, per annum, annual. Calculated monthly is paid the first day of the following month. So it'd be paid in cash the first day of the following month if we have it. We do not presently have a line of credit. A couple of reasons we know that. Number one, they would have told us. Number two, they say Motor maintains a minimum cash balance of $30,000. And we started the month with $40,000, which means we would have paid back the line of credit, the extra $10,000, if we actually had some outstanding. So we don't. So I'm going to sum up the month of April, and I get cash disbursements, $376,150. Which means I get to my net cash by taking my opening balance of $40,000, add my cash receipts of the $340, and then subtract the $376,150. So that works out to $3,850 is our net cash. The question states Motor maintains a minimum cash balance of $30,000. Now the reason they do that is just to allow for fluctuations from day to day in your bank account over the month. So they kind of look at what are their highs and lows and what does it fluctuate. Just like your bank account, if you have a job, the day before your paycheck, it's pretty low, and the day after your paycheck, you finally have some money in your account. Same thing happens for a company. They pay some bills one day, they'll get some cash the next day. So they've looked at their bank account and said, hey, we usually fluctuate $30,000 throughout the month of a high and a low. So therefore, we want to make sure we keep a minimum balance of $30,000 when we're budgeting, just to allow for that fluctuation. So our minimum cash balance that we want before financing or getting a line of credit is $30,000, which means we're not going to have that minimum cash balance. We will have a deficiency of $26,150. Which means we need to borrow some money, or we need to plan to borrow some money out of our line of credit. So if we look at our financing section now, in financing, we're going to have our opening balance, which I've just said is zero because our account balance at the beginning of the month was $40,000. We will look at how much we need to borrow, and in this case, we need to borrow $26,150. How much are we going to repay? Well, nothing right now. And so that means we are going to have a balance in our line of credit at the end of April of $26,150. So that means our cash balance that we plan to have at the end of the month is going to be our net cash plus what we borrow. So we end up with $30,000, which is what we want as our minimum. So all I did was take what net cash that we would have at the end of the month, add in what we're going to borrow, and that will be our cash balance at the end of the month. Now we're borrowing some money. The question says, any monies taken out of the line of credit are removed on the first day of the month. So this $26,150 was removed on April 1st, which means for the month of April, we will owe some interest. So April 1 to April 30th, we had $26,150 outstanding. The interest rate is 5% per annum, per year, and we have it outstanding for 1 month, for the month of April. So that works out to $109. That is going to be interest expense for April. Gotta love when you go back to accrual accounting. Debit interest expense, credit interest payable for the $109. So when we go to do our balance sheet, we're going to need to pick up the account interest payable. When we go to do our income statement, we're going to need to pick up the interest expense. This $109 will then be paid on May 1st because it says interest is at 5% calculated monthly and is paid the first day of the following month. So this $109 will need to go right here under our interest on our cash budget because we're going to pay it the first day of the next month. Okay, so now that we've worked out the interest and we've worked out the prior month, we have a closing cash balance of $30,000. So that is our opening cash balance for May. Now that we've worked out the interest, we can add up everything. So we take our beginning cash balance, add our cash receipts, then we'll subtract our cash disbursements, which total $492,184. And we get net cash of a negative $26,484. We need to have a minimum cash balance of $30,000, so therefore we need to borrow $56,484. Our opening balance in our line of credit is $26,150. We borrow $56,484, and now we have a line of credit balance of $82,634. Which again, if you take your net cash, add what you borrow, you will get $30,000 is your ending cash balance. Interest for the current month, because we're going to have to pay it the first day of next month. Any monies taken out of the line of credit are removed on the first day of the month, which means for the full month of May, we had a line of credit balance of the $82,634 because it was taken out the first day. And their whole thing here is to budget for the maximum amount they're going to have to pay. So $344. So for May's income statement, we're going to have an expense of $344. For May's balance sheet, we're going to have an interest payable of $344. We will then pay that on June 1st. Out of our cash budget, $344. Our ending cash balance was $30,000, so we can now do June. $30,000 plus the $540, subtract $457,769 means you now have a positive net cash of $112,231. Minimum balance is $30,000, so therefore we can repay $82,231. If you have more than what's in your line of credit, you're only going to pay back what you owe in your line of credit. Our opening balance is $82,634. We will repay $82,231, leaving us with a balance of $403 in our line of credit. This number minus this number will give you the $30,000 is what's presently sitting in our cash account. Our interest, June 1 to June 30th. The question says, any monies repaid to the line of credit are paid on the last day of the month, which means we still had the full $82,634 in there during the month. We did not pay it off till the last day. So $344 will once again be the amount of interest expense and interest payable. And we're not doing July's cash statement, so we don't have to worry about this going through. So for the quarter, opening cash balance 40,000. This is 453, totaling to 1,326,403. Net cash 29,597. Minimum 30 means we borrow 403 net. Opening 0, 82,634, 82,231 means 403. You don't really have to do the for the quarter column. It's a lot, and you have to work it through methodically, and you have to do month by month by month. And go through all of them.